It takes money to make money. That's popular saying. But happily for us, you can get access to money to invest. In this video, I'm going to talk about credit. A lot of people talk about it, but I will talk about it with my investor point of view. While most of the people will only use their credit to buy their personal house or to get a loan for their car, some people will use it as leverage. By doing this, I'm currently renting the place where I live, but I own $1.2 million worth of real estate. This sounded like a brag, didn't it? Well, guess what? It was not. And it's not impressive either. It's just to show you the mindset that I have when I manage my stuff. I'm Bernard Dumas, I'm into finance and real estate investing, and in this video I'm gonna tell you how you can use your credit to get the biggest impact. Let's get started. And yes, that's the best way of sitting. It keeps your back straight. So there are mainly 3 perks of having a good credit, and I'm gonna tell them from the lowest to the highest impact they can provide. I will go very fast on the first points because for me, the third is the real deal. So first, credit card benefits. With your credit cards, you can have some benefits like insurance or cashback on your expense. Now, most of the people will make a light use of credit cards and base their choice with these factors. Now, the second one, you probably know someone who travels a lot and never pays for his hotel or his flight or only pay a small amount. And that's because he always has a tons of points from every reward programs. So if you're interested in this, there's a lot of stuff on internet on how to make the best strategy to stack reward points really fast. Most likely you will get a better value in dollar if you go after points rather than cash back on your expense. And this is something that I used to be into, but for some reason I think it's better to go after the third one. And sure, you can mix those perks together, but it's better to focus on one strategy while letting the other perks secondary. Now, what could be the third one? If only there had been a clue since the start of the video. Well, obviously it's leverage, and there is some way that you can use your borrowing power to grow your wealth. So the simple way to see it is that you borrow money with the intention of investing it in a project that will grant you better returns than what the money cost you, aka the interest. And of course you have to be able to handle those monthly payments, because each month you will have to pay an amount for the money that you borrowed. So this is where I make a disclaimer about me not being a professional financial advisor, and I'm just a guy on YouTube telling you my point of view and what I've done and what I'm about to do. So please don't go out there and maximize your credit capacity and then buy a boat and then go bankrupt and then blame me because everything I say is wrong. Seriously, don't do it, please. And it's very important to understand what you're doing with this money. And for me, the name of the game is real estate. This is something that I study and that I will always keep on getting better and better knowledge, because the more knowledge that I have over real estate investing, the more control I will get over the risk related to my project. And also because I will be able to build projects that will provide me with better returns. Of course, leverage is something that you can balance, and you have to balance. You don't have to go all in and put all your credit capacity into projects, even credit cards with 19% interest. This is something that I will never do, and you have to always plan for a safety funds for your project. If something goes wrong, you must have access to this money that will prevent you from being in real trouble. Sometimes I hear people that are against using leverage in real estate projects. Like, hey, if I don't borrow the bank any money, I cannot go bankrupt. Wow, I'm a genius. Well, when I hear this, I can't think anything else but that these people have probably not played with the numbers very much. Because when I look at how leverage affects the returns of my projects, well, let's go check some numbers. Alright, so this is a real estate project simulation, and in this project it's like we would buy an asset for 200,000 and we would hold this asset for 10 years. Now, the way this project is built right now, you can look at LTV, which stands for loan to value. So right now at 80% loan to value, it's like we would have a mortgage that covers 80% of the 200,000, and the mortgage would be on 30 years at 3.75% interest. And what I want you to look at is when I look here at the leveraged equity multiple. So right now what happens is that the money that I will put in the project myself, which is 20% of the 200,000, so 40 grand, what will happen with the 40 grand that I would commit in this project? And if I would borrow 80% of the whole amount of the purchase price, I will make 2.63 times the 40 grand that I will commit in this project. And what you can see just over here is the unlevered equity multiple, is what would happen if I would buy this property cash. So you can see here that it's 1.59. So by borrowing money, I will get the money that I put myself in the project more efficient, and I will get a better returns on the money that I will commit in the project. And now over some case, over the last month, I made a deal where I bought 2 properties for 5% down. Look at what happens when I put the loan to value at 95%. My leveraged equity multiple is now 6.5 times. So that's how you get your money to be really efficient. But hey, can you analyze a real estate project only by looking at the equity multiple? Well, obviously you can't, and you have to look at much more data than this, and it's much more complex. But this just gives us an idea of how leverage can affect our returns on this. Here are 2 points that you must think of when you think of credit. Now, if this is not the way that you see credit right now, you have to change your mind if you want to grow. And the first one is that it's a limited resource and it's not something to waste. And the second one is, what's the second one? And the second one is that not everybody will have the same amount of credit disposable to invest. Like it or not, we're all playing this game. And this game starts the day that you turn 18. And thing is that no one prepares you for this game. And the way that you play this game will affect the amount of credit that becomes available to you to invest, and how interesting this credit is, the interest rate and the conditions, and how it will evolve and grow in the future. But some people will play much better than others. And some other people will hit the like button down there and subscribe to my channel. I hope so. Why? Some will. Some will. So basically, there are some people that will have the same income as you have, but they will have much more credit capacity, and that's because they played the credit game better than you did. Here are some baseline for credit. You should put your daily expense on credit cards. They don't have any transaction fees, so enjoy this feature. But remember to always fully pay your monthly statement, or you will pay interest over your expense, and no one should really pay interest over their daily expense. Aim to always get the highest limits you can on your credit cards. This will start to build that nice depth that you need on your credit to borrow money with ease. And the way that this works is that when you have higher limits and you can borrow more money with your credit cards or credit lines, your utilization ratio is going to be lower for the same amount that you spend. In fact, if you want to optimize your credit score, you should not go higher than 10% of utilization ratio. And this is one of the reasons that when you start investing and committing the money of your credit on project, you start being less and less interesting and more riskier for the bank. For the credit score, a lot of people aim to always have the perfect credit score, and it's so important. It's not that important. What you need to do is to focus on your growth, and to grow you have to use this money. So don't overthink it, and as you use this money, your credit score will go lower a little bit, and it's okay. Once you refund this money, it's gonna come back. Now, anything above 720 is gonna serve you good. In fact, if you're above 800, it probably means that you don't use your credit enough and that you could use some leverage a little bit. It means that your utilization of credit is stagnant. Now, the funds that I use for leverage are obviously mortgaged, but I also use credit lines with low interest. And I work my way to have high limits credit line that I can use for leverage. Have you ever heard that the bank will loan money to the one that doesn't need money? Well, it's sort of true, and it's much more complex than this, but thing you have to understand is that the moment you start putting money on those credit lines and you start using your credit and getting mortgage, that's when you become less and less interesting for the bank. So the best moment to go for those real good low interest and high limits credit line and to raise your credit card limits, that's when you actually don't use money on your credit. That's the best moment to do it. This is something that can be seen as a cycle, and you have to learn when you are in a good position to borrow money. And when you're in a good position and you have a good momentum, you should plan the way you're gonna do it and exploit this situation. And once you squeeze the maximum as you can, now is the time to make a good use of it. Now, there's also strategies that can be used to get the maximum of credit lines that you can. And some of those strategies will imply the use of corporation. And if you guys are interested in this stuff, I can make videos about this. Just let me know in the comments below. And if you like the video, you can like the video. And if you hated it, just let me know in the comments down below. And this is a new channel, so if you want to subscribe, I'm gonna make more of these. Alright, so I'm out.